And we saw the headline, we were saying, we got to get Eric Schatzker in to talk about this. Xi Jinping, the architect of China's COVID-0 policy, he's been championing China's approach to managing COVID as the way to save lives, billions of lives in China. The country's made an about-face, and it seems to have abandoned COVID-0. However, Xi Jinping has not said a whole lot about this. It's just being kind of filtered through other government officials. So the strategy that he championed is now crumbling, and we're seeing the fallout all over the place. Beijing looks like a ghost town if you look at pictures there.
Scarlett, Katie, I think it is absolutely amazing to witness the policy that Xi Jinping ruthlessly and brutally enforced for almost 3 years suddenly end with barely an acknowledgement from the central government. As you point out, Xi Jinping himself has said nothing. I don't know that he is ever going to say anything to acknowledge this change in policy. But a current vice premier, Sun Chulun, who is exiting the Politburo when the new Politburo, takes force, I believe, in March, said at a news briefing almost 10 days ago, no, more than 10 days ago now, that, in fact, it's almost 3 weeks ago, that, quote unquote, our fight against the pandemic is at a new stage, right? You can interpret that to mean whatever you want, but practically we can see exactly what's happening.
Yeah.
COVID-0 does appear to be gone. What it's left me wondering is why, right? It was enforced, again, for almost 3 years.
Yeah, why now?
I think there at least are two reasons. The one is the importance of control by the central government, right? It does appear that President Xi was genuinely alarmed by the protests that started in far northwestern China and the potential that they represented for growing dissent or wider repudiation of government policy. And that's fascinating, right? It signals that the social compact, so critical to holding the Chinese state together, is a much more delicate balance, perhaps, than people realized, and that the CCP's ability to exercise total control over the country isn't exactly absolute. Now, there is no such thing as absolute, but we thought it was pretty close to absolute.
Yeah.
And now it appears to be less than absolute. And then I would just say as well that economics clearly played a role. We saw this morning that China's budget deficit from January through the end of November is at a record $1.1 trillion, double what it was at this point last year, and more than it was in 2020 when China, just like the rest of the world, was fighting like mad the first waves of COVID, which had a depressing effect on the economy. Yes, there's a housing bust mixed in there too, but it does show you how depressing this virus, this policy of COVID-0 has been on the Chinese economy.
Right. And I mean, those concerns only get larger when you're talking about recession in Europe, in the US, other parts of the world, what that means for demand for some of these Chinese goods. But talk to us about the silence, because until there's clear messaging, can we really truly say that COVID-0 is gone for good, or does that just mean that we could see another reversal?
Well, there's always the potential for a reversal of sorts, but this is just me talking. I think it's hard to see a policy as restrictive as COVID-0 ever coming back, given that it has now been swept away with, silence. It's going to be hard, right? It's probably going to kill millions of people in China. I've seen estimates of anywhere from 1.5 to 5 million people. We've all read or heard the reports about the bodies piling up at crematoriums. And we're never going to know. Again, going back to silence, right? The Chinese government, as you may have seen today, or overnight anyway, redefined the way it classifies a COVID death. It's no longer somebody who died who tested positive for COVID. You have to have tested positive for COVID and died of respiratory failure. So if you had a heart attack after you after you tested positive for COVID, that doesn't count.
You died from a heart
attack. And so again, that's information management, part of the effort to control the population and the way that they think, the way that they behave. But people are taking matters into their own hands. At the same time, crazy stuff is happening because they have lousy vaccines, they have no access or very little access to antiviral medication. Sales of lemons have soared, and the prices have doubled in 5 days because people are looking for sources of vitamin C. Sales of canned yellow peaches for some reason also seen as
People think that
something
it'll
of
help them fight it off.
some health benefit, have
Yeah.
jumped by 900% at one grocery chain owned by Alibaba.
I mean, I think you make a good point that the economic data shows that the damage to the economy is so strong that at some point China said, okay, we've got to pivot from making sure that we're managing through COVID to starting to bring the economy back up together. As long as we have these social protests as well, we need to kind of nip this in the bud. There's an argument to be made, though, that in waiting this long to open up the economy, China saved millions, billions of lives because COVID is less virulent than it was 3 years ago.
The current strains of COVID
Yeah.
are unquestionably less virulent, certainly in places where people have access to good vaccines.
Or
like,
have immunity
like this country,
through,
for example.
through having had it already.
Well, there are some questions as to how long that immunity lasts and how permanent it is within the body, but that's, China, yes, you can make the argument that it saved lives up until now, but without a deal to acquire Western vaccines or Western antivirals, how many people are going to die now? And furthermore, the State Department is concerned about this, and so are virologists. What will the unchecked spread of the virus in China mean in terms of the emergence of new variants, which won't necessarily be less
Virulent. Right.
or
it's not linear,
or
where
serious.
each series of each modification of the virus gets less and less virulent. It's
Right,
not clear.
and we have to confront the possibility, and it might ultimately be the reality, that anything, any variant that develops in China and becomes more serious than the ones we're currently dealing with will inevitably leave China and find its way to the rest of the world.
I want to talk more about the demonstrations, the protests that we saw, the potential role maybe that they played in seeing this shift away from COVID zero. Again, we haven't heard from Xi himself on that, but that shift away. Does that open the door to more protests, to more demonstrations in the future, not necessarily about COVID zero or those policies, but what sort of precedent does that
You would
set?
think so using Western logic,
Right.
right? I'm not sure Western logic necessarily applies in China. The rules of the game are different there. But people in China, just like people everywhere else, can, so to speak, do the math, right? They've seen that these protests erupted. It was clear. I don't know
surprised
how
everyone.
extensively news and or pictures of the protests were disseminated in China, but it was certainly extensively enough that, protests started to pop up everywhere. And yes, there is some evidence now that protests of a certain nature may prompt a response of some sort by the government. In this case, it appears to be a change in policy or an easing of policy, let's call it that. I don't want to use monetary policy terms, but it was an
adjustment to
easing of
policy.
policy. However, I would also say memories in China run long, and on that scale, 1989 in Tiananmen Square is far from ancient history, and that was a very different policy response from the central government to protests.
All right, Eric Schatzker, really enjoy having you here with us to talk through this. Where are you traveling to next? Because you're always on the road.
I'm going home to Toronto for the Christmas
That
holidays.
sounds pretty nice.
Not too far. He's going north of the border. But then you're going to start the new year off.
Morocco.
Oh, man. You don't need a jacket there, perhaps? Not compared to Toronto.
A jacket of, down jacket?
Yeah.
No, not unless I go skiing in the Atlas Mountains.
Oh, that sounds
Stay tuned.
Eric has some plans. Eric Schatzker, thank you so much. Eric Schatzker is editorial director of Bloomberg New Economy. This is Bloomberg Radio. This is Bloomberg Business Week on Bloomberg Radio with Katie Greifeld and Scarlett Fu, in for Carol Masser and Tim Stanovic.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash is brought to you by Innovation Refunds. Are you looking for ways to grow your business? Well, you can get back the money you may be eligible to receive through the Employee Retention Credit. Sign up now before it's too late. See if your business qualifies for ERC assistance by going to getrefunds.com. We're 22 past the hour. Markets still reacting to a shocking move overnight by the Bank of Japan. Let's get the very latest as we cross to the Bloomberg Macro Squawk Desk to check the price action with Bill Maloney. Hi, Bill.
And good afternoon, Doug. U.S. stocks are quiet today with the Dow currently up 90 points. S&Ps are higher by 4, and NASDAQ is lower by just 2. The U.S. 10-year yield at 3.69%. Gold is up 29. Oil is trading in the green, and Bitcoin is now little changed. Among the main 11 S&P sectors, leaders were energy and materials. Consumer discretionary was under pressure. And leaders to the upside in the Dow, Boeing and IBM, while Intel fell 1% and led to the downside. In other news, the CFPB ordered Wells Fargo to pay $3.7 billion for loan mismanagement, and Tesla fell another 6.5% today to its lowest level since November of 2020. Wrapping things up, Nike and FedEx both report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Doug.
All right, Bill, thank you. To get live audio updates right on the Bloomberg terminal, the function is SQUA, then the green go key. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Thank you so much, Doug. It is time for another edition of Bloomberg Plugged In, your weekly look at EVs, brought to you by Audi. Don't let someone else drive off in the Audi model that you've always wanted. Visit your local tri-state Audi dealer to get behind the wheel of yours today, or visit AudiOffers.com for more information. Here with today's look from electric vehicles, or on electric vehicles, is Ed Ludlow. He is the co-anchor of Bloomberg Technology, and Ed is in London right now. Ed, let's put some perspective on electric vehicles. I mean, I've always been nervous about them because I feel like you can't go far distances. You can maybe drop your kid off at his hockey game and then, you know, go and pick up something at the supermarket. Right. But I don't really want to drive any distance in it because what if I can't find a charging station? What do we know about what the charging infrastructure looks like right now?
We're kind of teeing ourselves up for a chicken and egg conversation, which, as you guys know, is exactly the kind of conversation I love to have. That's true. You know, a big barrier to consumers buying EVs in lots of markets has been range anxiety. What if you run out? And part of that is because of the familiarity of plugging in, right? Using charging technology, but also knowing where it is. And this is why we're on today. Bloomberg New Energy Finance have published this study that says cumulatively in 2023 we'll reach $100 billion of capital deployed globally. That's kind of the headline figure, and it's based on what has been just a massive jump in 2022. You know, we're talking about 228% growth in capital deployed into charging infrastructure year on year, this year, 2022. But really what this story is about is that now people in the real world starting to see the net result of those dollars, which is charging stations popping up in countries all over the world.
So it feels like there's a pretty big if in here. Let me read you this line from the story written by Bloomberg's Ryan Fisher. Cumulative investment globally will probably pass the $100 billion mark in 2023 if China keeps up its relentless pace. How big is that
Yes.
if?
So China is the world's biggest automotive market, and it's also the world's biggest market for electric vehicles. And, you know, differently to the United States, where EVs are just a few low percentage points of penetration in overall sales, basically only 4% of every car sold in America is an electric vehicle. In China, it's much, much higher. There are so many more brands and models. And of all of that massive growth I just told you about in investment in charging infrastructure, China accounted for 61% of it globally this year. So based on the growth we saw year on year, and based on the just intense energy, pardon the pun, and capital that the Chinese private and public sector are putting into this, that's where Bloomberg New Energy Finance comes up with this forecast that we will hit $100 billion cumulatively next year.
What do we know, Ed, about public charging companies? Would big oil ever invest in these companies or start taking on some of this business itself?
So the way that Ryan, who's one of our analysts at Bloomberg NEF, phrases it is that there are kind of like the 4 stages or the 4 evolution stages of EV charging. We've been through 1.0, which is like when the Nissan Leaf came out in 2010 and there were like a few chargers everywhere. Then 2.0, when Tesla started building them all over North America in 2019. We're somewhere right now between stage 2.5 and 3, where you have these public charging companies like Electrify America, ChargePoint. You have the public sector, the government pushing for it. But the question is, how do we get to stage 4.0? And you're exactly right, Scarlett, that actually what Bloomberg NEF sees is the need for the energy sector, big oil, to basically pivot, start deploying capital to scale their own offering for public, commercial, private charging in developed markets around the world in the first instance, to make EVs a mainstay. And Bloomberg NEF says that that basically coincides with, particularly here in North America, right, where we're lagging behind China and Europe, where 30 to 35% of all the cars on the roads are EVs, not just low single digits, but they do think that big oil should be a part of that evolution, so to speak.
And so, Ed Ludlow, I associate you so strongly with Elon Musk, and this actually works out really well.
Is that a compliment?
It's a compliment.
Do I take it as
on the reporting side? On the reporting side.
On the reporting side, I don't know Elon Musk personally. I do know you personally, but I can't comment to how alike you are as human individuals. But you spend a lot of time talking about EVs. You spend a lot of time talking about Tesla, which means you spend a lot of time talking about Elon Musk, which means I need to ask you about Twitter.
Sure.
And the poll that we got from Elon Musk on Twitter over the weekend, basically asking if he should step down as CEO. He got millions and millions of votes. The consensus was that, yes, he should step down. And Bloomberg News reported today that Musk is now looking for a new Twitter CEO after losing that poll. What do we know? Who is maybe even in the running here?
Okay, I will answer, but really quickly, I don't have my Bloomberg in front of me. So you look up really quickly where Tesla shares are trading right now.
I would do anything you told me to.
It's a red arrow down, I'll tell you that much. How about that?
6.4% lower.
Okay,
140.
so that's a part of the story too. Look, Musk said that he'd honor the result of the poll. Bloomberg sources tell us he has been looking, he is looking for a new CEO at Twitter, and that this could be a drawn-out process, according to one source, that this is going to take time to happen. I know that I've spoken to some of the investors into private Twitter, the private entity that is now Twitter, and they're pretty fed up, right? They basically want Musk to make a sort of prudent, sensible decision, bring in somebody with management experience, somebody that's well-known in the world of media or TMT, but Musk doesn't want to do that, right? He wants this so-called technologist, someone that is an AI engineer or software engineer. And so that is what we're kind of waiting to happen. But I believe Ashley Vance of Businessweek has spoken very briefly with Musk, who basically confirms the idea he's looking, and has also dismissed that it can be anyone other than this technologist type that he's talked about.
And just to tie this back into Tesla, Twitter is no longer publicly traded because Elon Musk owns it, and it's a private company. But Tesla has become kind of a proxy stock for Twitter and what people think is going on there, or in this case, the drama that's unfolding.
Yeah, that's completely fair. Investors vote with their feet, and I think we're down like more than 10% in 3 sessions. I think we're down at November 2020 lows, if I'm right, when I last checked the Bloomberg. And everyone always sort of rolls their eyes when you bring up sell-side analysts, but I think Oppenheimer cut their price target on Tesla yesterday. Mizuho cut their price target. Both of them sort of
and
cite
Evercore today, actually.
And Evercore, right. And they all cite the Twitter overhang, either because Musk has been selling Tesla shares, which we believe is associated with the financing of Twitter's deal to purchase, but also the servicing of the debt, or it's just by association, right? The stories of these two companies have become so intertwined, partly because of key man risk. Elon Musk, if he's not paying attention to Tesla, well, he's distracted. So that's a negative. And Elizabeth Warren's written to Tesla's board and sort of claimed that they're failing in their fiduciary duty to keep Musk focused on that company. So I think, I know from investors I've spoken to, but also just go on Twitter and look at what people are saying. I think folks are pretty fed up with the state of affairs, and they want Musk to go back to being focused on Tesla, and they want somebody sort of competent to come in and run Twitter.
First of all, I am shocked to hear that they let you get away from your Bloomberg terminal. I thought you were actually changed to it. So I'm definitely learning some new things about you today. But talk to us. We've obviously, like you just laid out, we've seen these downgrades, these price target cuts when it comes to Tesla on this Twitter overhang. But what about the fundamentals of Tesla? What does demand look like there? Are there concerns around that side of the business?
I would say that in the note from Mizuho published today, they did cite, that the consumer is under some level of duress globally, not just in sort of Western developed economies, but China as well. And China is, of course, a big driver of growth for Tesla. In that market, you have to kind of offset the easing of COVID restrictions on a policy perspective from China with the idea that there's COVID everywhere, right? And that is going to impact the consumer's ability to spend. But Tesla has proved resilient. The difficulty is this issue of pricing. The price has creeped up, the average selling price in lots of markets. And at a time where inflation's running high, consumers are feeling the pinch in different markets. There is a concern that actually now that product is priced a little too highly to be attractive in an environment like this. But then that's also a lever that Tesla can pull, right? That you can always lower the price just as you raised it in the first place.
All right, and just for those keeping track at home, Tesla shares are down 60% year to date, on track for their first annual fall since about 2016. Great context from Ed Ludlow. He is co-host of Bloomberg Technology on Bloomberg Television. Let's get a check on the latest world and national news now with Denise Pellegrini in the Bloomberg 1130 newsroom. Hi, Denise.
Hey there, Katie. Thank you. The House Ways and Means Committee meeting today to vote on possibly releasing former President Trump's tax records. Texas Republican Kevin Brady making a request to Chair Richard Neal that proceedings for this committee's decision eventually be made public.
Ask unanimous consent if any taxpayer information is public as a result of the markup today. The entirety of today's executive transcript be made public as well. This transparency is a precedent, as we've discussed in both 2014 and 2019.
And Brady speaking
we're in broad
as
agreement with the gentleman's request.
And Brady's speaking there as the closed-door portion of that Ways and Means Committee got underway. Lawmakers signing off on a $1.7 trillion funding bill with a plan to push that deal through the House and Senate sometime this week. More from Bloomberg's Amy Morris in Washington.
The legislation provides funding for government agencies through the end of fiscal year 2023. It provides the military with $858 billion, a nearly 10% increase over current levels. It funds domestic programs at more than $772 billion and includes $45 billion for Ukraine and $41 billion in disaster relief for communities affected by recent hurricanes and wildfires. Congress must complete the bill by Friday night to avoid a government shutdown. In Washington, I'm Amy Morris, Bloomberg Radio.
Thank you, Amy. And some news on that earthquake in San Francisco. Reports of damage to roads and buildings coming after that magnitude 6.4 quake. Northern California, northeast of San Francisco. This person called Monk says the shaking woke him up.
People are driving around looking, checking on their neighbors. People are plugging their hybrids into their houses if they can to power their houses. It's supposed to be no power till 10 p.m. tonight.
And authorities do say the area is relatively sparsely populated, obviously, compared to San Francisco itself, and that limited damage. I'm Denise Pellegrini. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
The equity market is trading at higher levels as we make our way to the closing bell. Of the 11 industry groups within the S&P, only one negative. That's consumer discretionary, which is really a story about Tesla today. This stock is down nearly 7% at the moment. Analysts over at Evercore ISI and Mizuho both cut their price targets on the stock, citing concerns about weak demand going forward, especially in China. And then on top of that, growing angst over Elon Musk's focus on Twitter. Today we are being told that the Federal Trade Commission is deepening its investigation, the one that it opened this fall, into Twitter's privacy and data security practices. And against this backdrop, markets are still reacting to that shocking move overnight by the Bank of Japan, the BOJ adjusting its yield curve control program. It was a hawkish move. It has created a rally in the yen, stronger against the dollar now by about 4% at 131.70. So dollar weakness today, and that may in turn be a tailwind for some of the U.S. multinationals within the S&P 500. Bloomberg Intelligence saying for every 1% drop in the dollar against the yen, EPS could grow 12 basis points. So with today's move, we're talking about maybe 48 basis points in strengthening for S&P 500 earnings. U.S. Treasuries being sold, long-term interest rates higher as a result, with the 10-year Treasury at 3.68%. We've got the Dow up 0.5%, the S&P 500 better by around 0.3%, NASDAQ comp up 0.2%. I'm Doug Krisner, and that's your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Hannibal's clip there. It is time for Drive to the Close with Charles Lemonides, founder and CIO of ValueWorks, here with us in person at the Bloomberg Interactive Broker Studio. Charles, great to see you.
Really nice to be here. Thank you for having me.
So how would you describe today's price action? This doesn't look like a rally so much as a pause in the recent selling.
Yeah, I would say it's a little bit of a respite and maybe a preamble to what we can expect towards the end of the year. You know, at this time of year, we tend to hope for Santa Claus rallies and year-end rallies, and those rallies happen for reasons. This one might be just setting up right now.
And so I hear ValueWorks. I think value stocks. Should I associate you with value stocks, or is that not necessarily your deal?
Well, you know, I'd named the place ValueWorks, so I do believe I'm a value investor, but we find value in a lot of different places. And one thing that I've always shied away from is believing value is the bottom half of the valuation continuum. It's when you care about price and you're getting a good business at a good price, at a discount to what it's worth today, that's value. And there are a lot of classic growth stocks today that are trading at value prices.
Name some names.
Longest favorite for us is Qualcomm. Another one that we love right now is Netflix. Those are two obviously classically growth stocks. Both of them are trading at very, very realistic value prices. Qualcomm is a single-digit earnings multiple.
That is so interesting. You know, Netflix is one of the dark horses recently. It's had a huge rally over the past couple months.
After being one of the worst performers in the first half of the year. So even so, it's still nowhere close to where it was at the beginning of the year. What's your read on this new advertising tier of subscriptions that it's offering?
Well, you know, I even take a step back from investors' reaction to that advertising tier and think about how much people judge the stock being expensive or cheap relative to yesterday's prices. Right, we just said, wow, it's had a great run over 3 months, but on the other hand, it's down massively from 600 to 200, back up to 300. The fact that it's down from 600 to 300 or up to 300 from 200 doesn't tell you about the size of its business or its earnings and where the share price is relative to that. And so what I think is really interesting about Netflix is that even up from 200 to 300, the multiple on earnings, the multiple on cash flow is really, really compelling. And then you take a step further and start talking about the subscriber business model, their subscriber model, and how they extend that into paid advertising. And you see that they're really well positioned, not just for the next 6 months, but for the next 3-5 years.
And so something that we saw a lot in 2020 was a conversation around short selling, obviously leading to some pretty big short squeezes, and became kind of a dirty word. But in this market, it seems like the consensus heading into next year is that there's more pain ahead, at least on a benchmark level. But when you look across some of the individual names that you've been keeping an eye on, do you see any shorting opportunities as well?
I see a lot of shorting opportunities.
Interesting.
And I see more and better shorting opportunities today than a year ago. Because the problem with a year ago at this moment was that so much of the market was on fire, and there was so much enthusiasm in some names, and while they were overpriced, you knew they could keep going higher. At this moment, because the Fed is draining liquidity and because investors have been so battered, it's really hard to see how story stocks get story multiples over the next 6 months. And so when you find something that's overpriced and their business is challenged, it's really hard to see how the markets bail them out. And so I think there are a lot of great short names right now.
But at the same time, they might meander for a while. It's not like it's going to be a straight line down. It's going to be, price discovery and searching for a bottom, and everyone's going to be listening for what the Fed says or what the Fed might do. It'll take a while for that bet to pay off.
I think that's exactly right. But the nice thing about having a decent amount of short exposure in your portfolio is to marry that with a decent amount of long exposure. So if you're shorting overpriced names that have problematic business models, and you're going long names that are really attractively priced that have good prospects, if you get a further leg down in the market, the shorts will presumably really crater, and the longs may give up 5 or 10 or 15%. And at that point, you have the advantage of not simply not having lost that much, but you then cover your shorts and you become effectively more long. So as you go into that market bottom, you get an explosive bounce.
I love this conversation on shorting because, again, I speak to a lot of people who are long-only investors. And part of the scary things that I hear about shorting is that losses theoretically are infinite. So when you're shorting a name, I mean, how sure do you have to be?
Well, there's 100% truth to that, almost. The devil's in the details there. When you're shorting a company with a $500 million equity cap like GameStop was at the low or even lower, and a $5 billion revenue base, you could easily see, 3x or 5x or 10x upside. When you're shorting a company like TransDigm, which has a $35-40 billion equity cap and a $20 billion debt load, so it's $60 billion to start. Yeah, I suppose it could double, but that's $120 billion, and it's larger than Boeing, and it sells $6 billion worth of auto parts, and Boeing owns half of the aerospace market in the world. When you're shorting a name like Texas Pacific Land, and it's a $20 billion equity cap, and they own $1 billion worth of real estate and maybe $2 or $3 billion worth of mineral rights, yeah, it could go up for sure, but from $20 billion, how much higher is it going to go? To $400 billion? It could happen, but that's really, really a stretch.
How much of your portfolio then is short? How actively are you shorting stocks right now?
We're shorting stocks more actively today than any time in my career. In part because I think we've become better at shorting as I've been doing it longer, and the opportunities right now seem more obvious.
Well, 30 seconds. What are some of your biggest short positions right now?
Broadcom, TransDigm, and Texas Pacific Land, and that'll do.
That'll do. So just 3 shorts.
No, those are. We also are short Wisdom Tree Financial, InvestNet, CNS.
I mean, that's
that'll
that's
do.
a lot. Yeah, that'll do. That is what a fascinating conversation.
How long do you hold those shorts for?
A long time. We have no distinction between how long we'll be short something and how long we'll be long something. We've been short Broadcom for 5 years.
Wow.
Yeah, and there are plenty of shorts that have doubled on us.
Well, we need to continue this conversation at some point. That is Charles Lemonides. He is the founder and chief investment officer over at ValueWorks, joining us in our studio. Great conversation.
It is 3:53 on Wall Street. I'm Doug Krisner at Bloomberg World Headquarters in New York, looking at today's company headlines. Wells Fargo has been ordered to pay $3.7 billion for misleading customers. A settlement with the CFPB includes $1.7 billion in fines to cover allegations of widespread mismanagement of auto loans, mortgages, and deposit accounts. Wells Fargo is now expecting a pre-tax operating loss in Q4. The Federal Trade Commission is deepening an investigation into one it opened this fall into Twitter's privacy and data securities practices. We are told FTC lawyers questioned two former senior executives at Twitter in the past month. They were asked about whether Twitter, since Elon Musk took over the company, whether or not Twitter has complied with the FTC's 2011 consent order. Separately, Elon Musk is actively searching for a new CEO to replace him as head of Twitter. We are told this search could be drawn out. Amazon has settled antitrust investigations with the European Union over how the company allegedly abused rival sales data. Amazon was accused of unfairly favoring its own products and squeezing out other traders on its platform. And Broadcom's proposed cloud computing company, that's the takeover of VMware, is facing extended European Union reviews. Regulators say this deal could lead to higher prices for business customers. Those are some of the company stories we are following at this hour. I'm Doug Krisner, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
Except that today it's Katie Greifeld and Scarlett Fu. We're in for Carol and Tim. And Katie, I don't know about Carol, but I'm guessing Tim probably tuned in to the World Cup final over the weekend, which drew, it turns out, 26 million viewers to Fox and Telemundo.
I could also see him doing something obscure like bike riding or I don't know, something Brooklyn-y. But yeah, no, a lot of people tuned in. I personally didn't. It felt like I was, watching it on Twitter though. Just the velocity of tweets was incredible.
You were kept up to date on every movement.
Oh, big time. Every twitch of the leg. But yeah, 26 million total viewers on Fox and Telemundo's broadcast on TV, broadcast TV and streaming services. That's a 60% increase from 4 years ago. Fox's 16.8 million total made it the most watched men's Men's World Cup telecast.
That's because they're so excited because Lionel Messi won his first World Cup championship and it was Argentina's first victory since 1986. I'm not a big soccer fan. I'm not. I think it's really boring. I like hockey, but this felt like a hockey game with the score going back and forth and the drama and the fact that it went into overtime and then it went to shootout. Like it was something for everyone. And I mean, I'm not big on superlatives, but this was seriously like the greatest soccer game I've ever seen in my life.
Wow. Okay,
Yeah,
that
it
is
was
a size
exciting.
and scope. If I was writing a story about it, I'd lead with that in the headline. But yeah, there were a lot of goals scored. I don't know a lot about soccer, but I know that the scoring is
Right,
kinda
an exciting
sleepy.
game is sometimes 0-0, which is not exciting in my book.
Yeah. So definitely a nail biter towards the end. And if you remember, Fox and Telemundo, they agreed in 2011 to pay about $1 billion for the U.S. television rights to the 2018 and 2022 World Cups. They were hoping to draw massive audiences so they could recoup their costs with advertising revenue. And just looking at the viewing numbers, looks like a good bet.
Oh yeah, definitely. I mean, it was a storybook ending for this World Cup final because it had the young, the old, right? It was Lionel Messi, the old guard, the best player in the world, the GOAT, effectively handing the baton to Mbappe, but not yet because Mbappe, as well as he did not win this World Cup, which would have been his second. So he's got plenty of time.
Yeah, he's fine. And should note that also they had the challenge of college and pro football. It was a rare conflict for an event that normally takes place in the summer, but even still, a lot of people tuned in to last weekend's World Cup. This is Bloomberg.
We're moving closer to the closing bell for market coverage right here on Bloomberg as we take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We are about 2 minutes away from the end of the trading day. Kaylee Lyons here alongside Sonali Bostic, counting you down to the closing bell and here to help take us beyond the bell with a global simulcast. We're joined now by Katie Greifeld and Scarlett Fu, bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the trading day. And arguably, Katie, the most crucial moment of this trading day came before U.S. trading actually started. It was in Asia overnight.
At 10 p.m., it's when that headline on the BOJ crossed. I was asleep, so I woke up and this was news to me. But it's interesting, if you look at how this is filtering through the market, all the action is in the bond market. You're seeing yields scream higher. Then you look at the S&P 500 and it's pretty uninspired, not really doing much.
I mean, it's interesting insofar as the 4-day sell-off seems to have run out of steam and we seem to see a stabilization in stocks, although it should be said that this is on lower than average volume. Just looking at the average volume right now in the S&P 500, it's off 10% from the 10-day full-day average.
Yeah, it's interesting because the most exciting macro trade of the year was short bonds, and you're watching that play through the entire end of the year. So I wonder if that trade's over. The dollar certainly seems to be topping out.
All right, well, we're literally about 30 seconds to go here. So just taking stock of where we are, literally unch on the NASDAQ. How often, Katie, do we see unch in this U.S. equity market to end the day?
That's the most beautiful thing that could happen. Everything is priced in. There is no new information, nothing to fuss about. If you look at it, the S&P 500, a little bit more action, but not much.
Yeah, only 1/10 of 1%. 38.22 looks to be about the level where we're going to close, or 38.21. The Dow actually outperforming a touch today. More cyclical, economically sensitive actually seem to be doing a little bit better. The Dow Jones ending the day higher by about 92 points at the 32,850 level. And we saw some outperformance of the small caps as well.
Breaking down the S&P 500, you have 270 names ending the day higher, 233 down, so pretty much an even split.
Even split, but let's take a look at the sectors here. Also pretty evenly split, though some really more affected than others. You have the auto sector here down more than 6% on the day, transportation down 1.5% on the day. Let's take a look at the green here because energy is back on top. It is 1.5% higher on the day. You also have those yield-sensitive sectors also getting quite the bid here. Insurance, that's where I started my career. Insurance up 1% on the day. You have diversified financials up like, 1/10 of 1%. Consumer services, food, staples, you're looking at a little green on the screen here, guys. But remember, we did have a few days of decliners there.
I'm not sure what's more boring, starting your career in insurance or starting it covering currencies in 2017, which is what I did. But anyway, pivoting to the gainers, let's look at Newmont. This is a metal miner, including gold, copper, silver, the list goes on. It's climbing a little bit today, about 4.5% or so. That's as gold gets a lift. Moving on, we do have some interesting corporate stories here. We have Moderna rising 6%. It's the biggest gainer in the S&P 500 today. It was upgraded by Jefferies yesterday. Its price target got a boost over at Piper Sandler today. That's after some promising data on a personalized cancer vaccine that landed in the past week or so. So Moderna riding that rally. And Meta, this one is interesting. Shares 2.3% higher. That says CEO Mark Zuckerberg takes the witness stand over at that FTC trial, that antitrust suit, defending his company's acquisition of virtual reality startup Within. Zuckerberg said on the stand that actually Meta wants to spur the VR competition. So there you go. Shares higher, Scarlett.
Spur the competition with who else?
It's a great question.
Okay, let's look at decliners right now. And thank you, Kaylee, for looking up the statistic. Tesla closing down 8.1% for its worst day since October 3rd. This is the 10th drop in 12 sessions. And unlike the past, there's an actual reason this time. A lot of analysts have been reducing their price targets. The most recent are Evercore, ISI, and Mizuho, cutting their price targets, citing concerns about demand. So it's not just as a proxy for Twitter, but there is some question marks about demand for Tesla's EVs, particularly in markets like China. Gilead Sciences losing as much as 5.3% on the day on disappointing results from a mid-stage study of drug cocktails in lung cancer. This is a new class of medicines that target certain T-cell proteins, and the results were not encouraging. And Broadcom a big decliner as well, because the EU is getting in the way of Broadcom's plan to buy VMware for $61 billion. EU regulators are warning that this deal could lead to higher prices, lower quality, and less innovation for enterprise customers, and therefore they want to slow things down. Take a closer look. That raises question marks over whether this deal will go forward as planned.
Okay, so there actually were some big movers beneath the surface of the equity market, even though at the surface level it was where really the bond market where it was at today. After that move from the Bank of Japan to raise the cap on the 10-year GGB yield from 25 basis points, JGB yield rather, to 50 basis points, we did see a move in treasuries as a result, specifically in the longer end of the curve. The 10-year up 9 basis points to 367. The 30-year also up about 9 basis points to 373. Meanwhile, though, we have earnings continuing to cross the wire. FedEx just reporting it actually is lowering its full-year adjusted EPS forecast. They see it, or it's coming in beneath estimates rather. They see it between $13 and $14 per share. The estimate was for 14.14, so a little bit light there. And they are also reducing their 2023 spending forecast by about $400 million. Of course, Shonali, cost cutting for FedEx in particular, really a focus this quarter. The stock initially dropped like a rock in after hours, trading down more than 4% initially when these lines crossed. Now we're looking at a decline of about 2% or so.
Yeah, it's interesting to see the EPS adjusted for the year moving lower here, even with CapEx spending coming down quite a bit. That is $5.9 billion. The estimate was $6.3 billion earlier. Remember, $1 billion now in additional cost savings beyond September is seen for FedEx, and they are also saying that they are acting to quickly reduce costs. The stock's still down about 4% or so, fluctuating a little more than that after hours.
And we know that FedEx had begun furloughing employees parking planes as part of that multi-billion-dollar cost-cutting plan. Again, looking at the hour's actions, after our reaction, rather, it doesn't look like that's quite going far enough for investors. And if you look back on this year, I mean, FedEx before today's close already down more than 36% year to date, underperforming the market itself. So a lot of wood to chop there.
Also worth noting, too, I was just looking at the quarter that ended. It blew it out of the water. Second quarter adjusted EPS of $3.18 versus a consensus estimate of $2.80. Adjusted operating income of $1.21 billion when analysts were looking for $987. Even though it lowered its full year forecast, maybe that's on the second half of next year or the coming fiscal year as opposed to the first half. Maybe the first quarter and the second quarter will still look okay. So it's interesting to kind of break things down because obviously it's not like a car that was going 50 miles an hour is going to hit on the brakes immediately. It's going to be a gradual slowdown.
Yeah, and we're seeing the stock fluctuating now between positive and negative territory in the after-hours trade. Investors maybe do like the additional cost-cutting efforts, as FedEx says it's identified another $1 billion in cost savings beyond the September forecast. But you also have to contend with the language used in the statement, Shonali. The president and CEO talking about a weaker demand environment. And when you kind of look beneath the surface of these results at an individual segment level, Express, which is a huge revenue driver for FedEx, that operating income was down 64% year on year due to lower global volumes.
Yeah, it's interesting to see the cross currents in these results. Ground operating income increased 24%. Partially due to the yield increase in cost reduction actions, but those were offset by increased purchase transportation rates, lower package volume, that's what we've been talking about here, and also for freight, also the increases here in operating income were offset by higher salaries, employee benefits, and decreased shipments. Bellwether stock here, guys.
It looks like we are seeing shares bouncing back a little bit, still lower, but about 0.8% versus over 4%. This wraps in nicely to what we're expecting, too, in a couple of minutes. Results from Nike as we think about the consumer, about demand, what that looks like. Obviously, that's going to be really in focus for Nike, too. Also, what discounts look like, whether Nike is really having to mark down products heading into the holiday season, and also an update on the supply chain. There's a lot to look for in the next couple of minutes.
You know, I was looking at some decliners preparing for what's falling today, and Lululemon was down, and a lot of people were citing Nike's results as something to really keep an eye on when it comes to Lululemon. They're also pointing out that Lululemon has some hip bag that's a really big deal this holiday season.
Like a fanny pack kind of
yes,
thing?
I've got one. What can I say?
I couldn't figure out what makes it so appealing. And then I read a couple of articles and they said because it's at a more attractive price point for Lululemon, which makes it a big seller.
I mean, Lulu's expensive.
Yes.
It also raises a question for me. Have we reached peak athleisure?
No.
Okay. That was a very quick no.
Sorry to shout you down. Not at peak athleisure, at least not for me, though you would have to pay me money to get me in a fanny pack. But we'll continue this discussion offline. Yeah, that's okay. I'm not exactly a trendsetter. We gotta go. That does it for now. Our cross-platform coverage of the market close on Bloomberg Television, Radio, and YouTube, and on Bloomberg Quick Take. We'll be back tomorrow, same time, same place.
That was the market close. very unexciting if you just look at the index numbers, but there are clearly a lot of moving parts underneath. And we're also going to talk about another company that is moving quite a bit, or at least when it comes to headlines, 3M. 3M shares finished down on the day, bucking the overall rise in the market, down 1.1%. The company is, we know, confronting a lot of regulatory pressure and lawsuits that threaten billions of dollars in damages related to its PFAS forever chemicals. Now it says it's going to stop making these forever chemicals and look to discontinue their use in products by the end of 2025. Let's bring in Tiffany Carey, a consumer reporter for Bloomberg News, who wrote about this. Tiffany, was this a surprise that 3M is going to stop producing PFAS forever chemicals by this particular timeline, end of 2025?
I think it did catch some people by surprise. I mean, the pressure has been on this company for a really long time, but, you know, at some point, I guess they just decided to act.
Can you step back a little bit and tell me what a forever chemical is? I feel like I should know what PFAS is, but full disclosure, I don't. They sound important, but how often would someone like me, for example, interact with one of these chemicals in my daily life? What are they used in?
Yeah, I mean, every day. That's the crazy thing about these. They're not only forever chemicals, they're kind of everywhere chemicals, and it's mind-boggling, actually, when you look at the list. So they're both used in consumer products that are stain-proof, waterproof. So think of, you know, your rain jacket or your waterproof running shoes, your waterproof leather boots. They were used in Scotchgard for a long time. And they're also used in a lot of industrial applications like medical devices, solar panels. Often they're used to make things smooth or slippery. So that's the connection.
And how much pressure was there from consumers for 3M to get out of this chemical, to do something?
Yeah, I think consumers are not even necessarily aware so much of the chemicals, but a lot of the environmental groups and the lawsuits are really where the pressure was coming from. I mean, this company has been sued by many different states, along with a lot of co-defendants that use these chemicals, by water authorities in different municipalities and states. And yeah, I mean, even California just got on even a bit late and sued them just this year.
I feel like this is like a Hollywood movie, and further down in Tiffany's story, it becomes apparent. Yes, Dark Waters. Mark Ruffalo, I think, was in that movie.
That's right, and he just actually put out a statement today calling this maybe, you know, the environmental crisis of our lifetimes. You know, a lot of people have compared these to DDT. But what's interesting here is that 3M did phase out some of these chemicals 20 years ago. And that is what led to these lawsuits that we have today. And at that time, it kind of said those aren't dangerous, and other people continue to contest that. And we've seen the lawsuits come, and some of them have been successful, some of them continue. And then today they're saying we're going to phase out the rest of these chemicals, all types of these chemicals, which is what the environmental advocates have asked for. Yet, because they're forever chemicals, they're still out there. No one has really a plan yet of how to deal with them, and it's not clear what the final liability is going to be.
And well, let's talk about what the final liability could be. We don't know exactly. Bloomberg Intelligence has put some numbers to it. How much this could actually cost 3M? Walk us through them.
Well, they have said 30 to 40 billion. It's really hard to, which is a huge number, obviously. And I believe there are some legal briefs where 3M has said, look, you know, some of these lawsuits are so aggressive, they would just put us out of business. So clearly there's a lot of work that needs to be done to figure out what the final number is going to be. And that's going to play out in a bunch of different court cases over a long time span.
For anyone who has a Bloomberg terminal, there's a function on the terminal called NI Quick, which gives you a quick explainer on things like forever chemicals. And there's one on PFAS forever chemicals. PFAS are in Scotchgard, in Teflon. That's kind of disturbing, Teflon, because
I use Teflon all the time.
Exactly, when I make
it's
stickers.
interesting they're used to make the Teflon. I believe it's always been said they're not in the end product. It's one of those industrial.
So I'm not eating these chemicals.
Yeah.
You shouldn't be, although there's weird questions about what happens when you heat Teflon up too much.
I know, and when people are like cooking with it, you know, some of it scrapes off too. So just not to add fuel to the fire or anything, but certainly just things I'm thinking about. Are analysts going to be downgrading their estimates, you think, for 3M because of this? I bring this up because obviously there are a lot of people waiting for earnings estimates to come down given the slowing economy, given the projections that the Federal Reserve will continue to raise interest rates because they see inflation being a persistent problem through 2023.
That's something I don't have visibility into, but I do think what's interesting is that the company is saying today that, its products are safe. It's continuing to say that. And it did say that when it phased out the other chemicals, yet that phase out moment seemed to intensify some of the lawsuits.
Mm-hmm. And so it's not just 3M, right? I mean, obviously 3M is closely associated with these forever chemicals, but what are some of the other companies involved, some of these defendants, for example?
Well, a big one has been DuPont, and then the sort of different corporate entities that were spun off through a series of mergers and sort of acquired the liability. So there was its company Chemours, and Dow Chemical was also involved in some of those transactions. And there are also, a bunch of different textile companies that may make these. We're not sure who those are, big sportswear companies. And what will be interesting in how this plays out is there will probably be a dispute about who knew what. So, did 3M know the chemicals were potentially harmful when it sold it to these companies, or did the companies use them incorrectly?
Got it. Tiffany, really appreciate your joining us today. Tiffany Carey is a Bloomberg consumer reporter, and she has written about 3M and its plan to stop producing forever chemicals known as PFAS by the end of 2025. Meantime, Katie, we have some earnings as we expected. Nike just coming out with reports, and its fiscal second quarter earnings per share, 85 cents versus 83 cents. So a little bit higher than what analysts, a little bit higher than the same time last year. When it comes to revenue, it did come in higher than expected, 13.3 billion versus the consensus estimate of 12.5 billion.
The stock is moving around here quite a bit. It initially spiked about 4%. Now shares are moving lower by about 4%. So traders clearly digesting this in real time. Just to, again, go through some of these numbers. Second quarter gross margin came in at about 42.9%. The estimate there was 42.1%. So a little bit stronger on margin. We're going to continue to look at that and see what exactly traders are seeing that they don't necessarily like here. Again, second quarter EPS, 85 cents. The estimate was 65 cents. So that's a beat, Scarlett.
That's a pretty big beat. And looking within the revenue breakdown here, and it's interesting that Greater China revenue was only down 3% year on year. So given the lockdown in China, and I know we're comparing a lockdown period to a lockdown period, but Taiwan and Hong Kong did open up more than mainland China. To only have a 3% drop was interesting.
Yeah.
North America revenue was up 30% versus the same time last year, $5.83 billion for the quarter. And when it comes to Europe, the Middle East and Africa, $3.49 billion, up 11% year on year. So double-digit increases for the U.S., North America, for EMEA, and for Asia Pac and Latin America, but Greater China was down 3%.
And we know that inventory is a big topic in the broader retail space right now. This could be maybe why we're seeing a little bit of pressure. Inventory was $9.3 billion. The estimate was for $8.37 billion. That is an increase of 43% year on year. Whether that has to mean bigger markdowns coming on top of the markdowns and the discounts that were already expected, perhaps that's the story that's going to emerge. But it's
the bargain shopper in me is very excited about this.
I know, right? Consumers are happy. Maybe the Federal Reserve isn't. That's a still resilient consumer, though.
Yeah. No, the consultants at Nike are probably not too pleased with that, but I'm thinking ahead to, outlets.
Going to be interesting to hear just what executives have to say on the call later to come. But Nike shares down at the moment. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
Lots of news after the bell. FedEx reported quarterly sales and earnings down from last year. The company is also warning of ongoing weak demand. Additionally, FedEx has identified another $1 billion in cost savings. That's beyond what FedEx identified back in September. And we had Nike with revenue in the second quarter that was above the average estimates. Gross margin at 42.9%. That was also above the estimate, but inventories grew by 43% from last year to a total of $9.3 billion. So these shares are being knocked around in the late session, both FedEx and Nike. Generally speaking, during the regular session, markets were somewhat jolted by a surprising move overnight from the Bank of Japan. The BOJ now adjusting its yield curve control program. This is construed to be a pretty hawkish step, with the yield on the 10-year JGB allowed to rise to 50 basis points. Previously, that upper limit was 25 basis points. Markets now debating whether the BOJ could raise interest rates in the year ahead. Quite the rally in the end today, stronger against the dollar by 4% at 131.65. Now, in the equity market, we had the Dow today rising about 0.3%, the S&P gaining 0.1% in both of these cases, off the lows and off the highs as well. NASDAQ comp finishing the session virtually flat. 10-year Treasury jumps nearly 11 basis points in yield today as investors sold the long end of the curve. We were last quoted in New York at a yield of 3.69%. I'm Doug Krisner, and that's your Bloomberg Business Flash.
Thank you so much, Doug. Bloomberg Business Week is brought to you by innovation refunds that small businesses impacted by the COVID-19 pandemic may qualify for the employee retention credit. Let innovation refunds do the work to find out how or now if your organization qualifies for ERC assistance. They've already helped businesses claim more than $2 billion in payroll tax refunds. Learn more at getrefunds.com.
All right, let's turn now and continue this conversation with Dr. Amit Pol. He is the Medical Director and Senior Vice President of Strategy at Doximity. He joins us on the phone from Washington, D.C. Dr. Pol, it's great to have you with us. So Doximity, it's a digital platform for medical professionals. And when I read the description, it sounds a little bit to my colleague here, Scarlett Fu, to a LinkedIn for doctors. So before we get into the outlook for 2023, maybe you could just explain to us a little bit more about what Doximity does.
Yeah, absolutely. To begin with, thank you very much for having me today. LinkedIn for Doctors is kind of how we described ourselves years ago. I will say that on that foundation, we've grown quite significantly. It is an analogy, though, that most people can relate to. We do enable healthcare providers to basically take control of their online presence by providing them a profile. And our network is HIPAA compliant, so they can actually securely interact with other professionals on Doximity. We now have more than 80% of physicians in the country on our platform and more than half of the PAs and NPs. So there's a good bit of the care team on Doximity. Building off of that base, more recently, we have enabled folks to actually consume medical content and literature and actually have one of the largest full-stack telemedicine platforms in the country as well.
So it sounds like it's a closed system where not anyone, for instance, Katie or I, would not be able to get logins on this. Is this a subscription model?
So for users, our services are actually free, but it is a closed system. And the reason it's closed is to really maintain that security element to it. We have users that are not only discussing clinical care, but often are actually practicing medicine through our telemedicine offerings on Doximity.
And let's talk about telemedicine, because definitely saw an uptick over the past 2.5 years when you think about the impact of the virus. And let's talk about how sustainable those behaviors are, because at least in the US, at least in New York City, where Scarlett and I are sitting, people are out and about. They're going physically to the doctor again. But do you think that that behavior will have a lasting change there when it comes to telemedicine?
Yeah, I actually do, and I can speak from my own kind of clinical experience that really a hybrid, what I've taken to call mobile medicine, I truly do believe is what we will be seeing more of in the future. There's some data out, actually. Analysts at Forrester Group predicted that in this coming year, up to a quarter of adults nationwide with chronic conditions will benefit from some form of remote patient monitoring. And we're seeing some significant trends in that direction, where the ability to provide more convenient or more easily accessible care utilizing digital technology has proven to be pretty impactful with providers and patients alike. And we're beginning to also see cost savings coming around as well. So the alignment of all those variables, I do think, despite the fact that society more broadly has opened up, we'll continue to leverage this type of technology to provide safer, more accessible, more convenient care well into the future.
What kind of healthcare needs may have, in concept, worked well through telemedicine, through mobile medicine, but in practice does not work as well? Meaning it's still better to go see the doctor in person for this particular kind of ailment.
You know, so it's a rapidly evolving landscape. And what I will say is that in a very short period of time, the breadth of conditions, if you will, as well as the extent to which we can access real-time data beyond just seeing the video image of a patient on the other side of a telemedicine connection, has increased leaps and bounds, really, in this short window of these past few years. I think places like the emergency department where I work, or the ICU, folks who are in need of emergent or critical care will certainly still benefit from that in-person interaction with providers. But there's a whole host of data out there that shows that management of chronic, even complex conditions can substantively be contributed to remotely or virtually. So I think that's going to be the dividing line in the future, where acute and critical care conditions will likely warrant that presentation to a hospital setting or a clinic setting, or God forbid, an emergency department setting. Outside of that, we are gaining a good degree of mastery of providing a much broader amount of care to a variety of conditions remotely.
And so let's talk about beyond the patient experience for healthcare providers, what remote care means in terms of cost savings, for example, in terms of the labor shortage, for example, when we think about how that's affected the healthcare industry at large.
Yeah, it has significantly impacted the healthcare industry. Healthcare workers continue to be in very high demand for several years now, and it continues today. We're kind of on this trajectory towards a growing physician shortage. And we all certainly learned from the pandemic experience, particularly in the peak times, that our hospital capacity is not an infinite resource. So I think the combinations of these trends have provided a good degree of benefit to healthcare providers specifically, in that it allows each one of us to be more scalable, if you will. Hospital systems, as well as, frankly, the government through CMS, have invested a good amount of time and energy into programs like Hospital at Home, where health systems can actually be reimbursed for the care that they provide to patients, where this time 2 to 3 years ago, that care would have been provided in a hospital setting. They now are able to leverage digital technology and remote monitoring to provide that care remotely, often from the comfort of a patient's home, and also get reimbursed for the provision of that care.
What are you most excited about when you look ahead to 2023 in terms of what could really result in some exciting innovation in the healthcare space?
Really, I do think it's this concept of mobile medicine. You know, I often joke with my colleagues, this is more than just getting our hair pills online. We can now do a variety of things utilizing this sort of technology, and we even see it in our data on Doximity that users are actually leveraging our telemedicine functionality in all sorts of practice environments for patients of all sorts of severity of their condition. And I think as we become more expert and experienced with this approach to medicine, that really does excite me in terms of the outcomes potentially being improved. And when I think about my own parents, for example, as they get older and have to begin to interface with the healthcare system more frequently, being able to do so from the convenience and safety and comfort of their own home is something that I certainly find appealing, not just as a provider, but as a prospective patient myself or an advocate for a patient in the system.
And of course, I mean, mobile medicine, it's not going to work for every condition out there, though. You did make the point, doctor, that for some of the more chronic conditions, that's becoming more of a reality. But when you look at the data on Doximity, what are the most frequent ailments, illnesses that you tend to see requesting mobile medicine?
So the way that our system works is that it's actually provider initiated. So we have a pretty strong proxy to the breadth of conditions that might be treated through the system by looking at the specialties of the users that actually leverage our technology. And it's all over the map. We have specialty physicians, we have surgeons, anesthesiologists, primary care providers, et cetera. So there is an increasing breadth of conditions that can actually be significantly contributed to, at least through this kind of remote or virtual management. We also believe that technology will be quite critical to expanding patient access to important care, whether it be remote clinical trial enrollment or real-time access to specialist consultation. Really, digital has a lot of paths forward, and healthcare providers and patients alike have already begun to reap the benefits of the technology.
Dr. Amit Paul, thank you so much for joining us. Dr. Paul is Medical Director and Senior Vice President of Strategy of Doximity, which in its early days was kind of a LinkedIn for the medical community.
You nailed it. You called it.
I should be someone pitching to VCs.
I know. No,
I'm a LinkedIn for blank.
Now I'm going to remember it.
Yeah, no, absolutely. There are a lot of these kinds of specialty platforms for different professions, whether it's the hospitality industry or whether it's the medical community, and especially for this, because of patient privacy, it's a big deal.
Well, let's get a check on the latest world and national news now with Denise Pellegrini in the Bloomberg 1130 newsroom. Hi, Denise.
Hey there, Katie. Thank you. Yeah, and another big deal is the House committee and what's going on there. It has spent years in court trying to get Donald Trump's tax returns. It's meeting in closed session now to decide whether to release them to the public. And Bloomberg's Irv Chapman is reporting from Washington.
The committee agreed in a brief open meeting to release a transcript of their full session. Then Chairman Richard Neal announced,
As we proceed to executive session, I would ask that the room be cleared.
Before the meeting, Republicans led by Kevin Brady characterized the potential release as
The flimsy and admittedly partisan Democrat efforts to target former President Trump. The political enemies list is back in Washington, D.C.
Brady said a party-line vote to release the returns would open the way to publicizing anybody's returns at the whim of congressional leaders in the future. In Washington, Irv Chapman, Bloomberg Radio.
All right, thank you, Irv. Disgraced co-founder of the bankrupt trading platform FTX, now expected back in court tomorrow in the Bahamas. We'll see if he drops plans to fight extradition to the U.S. If he does, he could be shipped back to the U.S. in short order, face criminal charges. At least 2 people dead following a 6.4 earthquake northwest of San Francisco. This person called Monk says the shaking woke him up.
People are driving around looking, checking on their neighbors. People are plugging their hybrids into their houses if they can to power their houses. It's supposed to be no power till 10 p.m. tonight.
We'll see about that. Thousands without power as the damage assessment continues. Authorities are warning it is possible another jolt could be on the way to the San Francisco area. And Walmart says it's closer to finalizing an agreement on opioids that would have it pay $3.1 billion, but not admit any wrongdoing in its handling of years of opioid drug prescriptions. Global News, 24 hours a day. On air and on Bloomberg Quick Take, powered by more than 2,700 journalists. I'm Denise Pellegrini. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
Lots of earnings news after the bell. Let's begin with FedEx. The company reported quarterly sales and earnings down from last year. The company at the same time warned of ongoing weak demand. In what could be taken as a positive, FedEx has identified an additional $1 billion in cost savings. That's beyond what it identified back in September. And those shares right now higher by nearly 3.5% in the late U.S. session. We also heard from Nike with revenue and earnings for the second quarter above estimates. Inventories did remain higher than usual and above expectations, growing 43% from last year, but the market's expressing a bit of confidence that Nike can unwind that inventory build. Stock is up about 7% right now in the late U.S. session. In the regular session, markets got a big jolt overnight, actually, from the Bank of Japan when the BOJ adjusted its yield curve control program. It was a hawkish move, and it began the debate as to whether or not the BOJ could raise interest rates next year. Quite the rally in the yen today, maybe a little bit of a short squeeze, I'm sure. The yen stronger by 4% against the dollar. Here we are at 131.70 as we get set for trading in Tokyo. Dollar weakness today, and if that trend holds, we could see a weak dollar providing a bit of a tailwind for U.S. earnings. That would be for the multinationals next year. U.S. Treasuries sold down this year, forcing yields higher, particularly at the longer end of the curve. 10-year was up more than 10 basis points today to 3.69%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, thank you so much, Doug Krisner. Well, Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds to apply for a payroll tax refund if your small or medium-sized business was impacted by COVID-19. Innovation Refunds clients already claimed over $2 billion in payroll tax refunds. Get started at getrefunds.com.
Okay, Katie, I'm really excited. We've been talking about this all
too.
day. Right now, we've got in the Bloomberg Interactive Broker studio with us, the Fragrance Queen. She is Linda Levy, president of the Fragrance Foundation, here to talk to us about the state of the fragrance industry this holiday season. Linda, you blew my mind with something that you mentioned earlier, and Katie was on top of this too. The fragrance industry does not just mean perfumes. It's bigger and broader than that, isn't it?
Yes, it is. And Scarlett and Katie, it is a thrill to be back. During the pandemic, the business has been soaring. So think about this. Of course, there is Zoom, and that's a personal fragrance or a cologne that you spray on yourself. But also, think about all the sanitizing and cleaning and how many lotions you've put on. Those have fragrance too. We consider those fragrance. And in addition, two major categories that have soared and will continue. One of them, you're going to nod with me, are all about home fragrances, candles, diffusers, plug-ins. People who were home and spent so much time there really wanted to enhance their environment and distinguish one room from another. Every night, my husband Steve and I, he picks a bottle of wine and I pick the candle to go with the meal.
There you go.
So there's a lot of fragrance out there in your environment as well.
What kind of scent do you pair with like an oaky Chardonnay, or what's your wine of choice?
Good question.
Well, many evenings, I must admit, Pinot Noir, the red one, is part of our life, and that brings you a little depth. So there's always a little fruity, and floral fragrances are big. Also, this time of year, there are a lot of holiday fragrances. You probably know Diptyque, Jo Malone, Boy Smells, Nest, and so many others have come out with fragrances that either remind you of some nostalgic holiday with fur and balsam and all that stuff, or D.S. Durga in New York based, he created a latke for Hanukkah, a latke taste. So it's
kidding.
Yeah, the candle smells like probably fried potatoes and oil and pepper. So I'm beyond fragrance, a big category in the industry and loved by consumers.
This is blowing my mind.
It is, and it's blowing my mind because, again, until I had this revelation during the commercial break that fragrance doesn't just mean perfume, that why would it, see an increase during the pandemic? We weren't leaving our houses. No one was smelling us except people theoretically who we lived with. But it kind of sounds like it coincides with the self-care trend when you think about lotions and candles?
Yes, it's very interesting. Even prior to the pandemic, where we weren't getting dressed up and going out so much, we started to reference fragrance, and even more so now, as the invisible accessory. So while everyone probably was getting much more casual, they really wanted to feel a little more dressed up, or when they went out and put the mask on, they wanted to have a little identity. We really believe, and we've proven, that fragrance as one of the senses was elevated, because during COVID, some people lost their sense of, smell. And the other thing is they wanted it for transportive reasons. So think about this, Scarlett and Katie, where did you go on vacation? And what did you smell, or what did you wear where you were on vacation? So while you were home during the pandemic, you wanted to spritz that on and sort of flash back to that Caribbean island or the coast of Amalfi or somewhere else where there was a distinctive scent.
I'm so glad you bring this up, because I was in Vegas last month, and what I noticed in walking through the different hotels was that every hotel had its own scent, but hotels that were owned by MGM Grand, for instance, had a similar family of scent versus those that were owned by Caesars. And it's very distinct, so that as you go through the different hotels, sometimes you have no idea whether you're still in Caesars or you've moved on to the Bellagio. And maybe my geography is wrong, so if it's wrong, sorry. But the scent would help you distinguish one venue from another.
That is exactly right on. Another type of fragrance is ambient scent. That's what we call it. So hotels or stores really want to create an environment or give you what you really smelled in those different hotels was what was their personality coming through, and it gives you a sense of home. It gives you a sense of what the environment's like. So in your fragrance list collection, we talked about home. The other one we talk a lot about in the biz is ambient scent, and it's becoming more and more popular.
And of course, we're having this conversation on December 20th. We are firmly in the heart of holiday season. Talk about how important that is for the industry as a whole, even as you're seeing other types of fragrances become more popular when you think about the home. But when it comes to the gift-giving season, is that still incredibly crucial?
Incredibly big. The pre-pandemic, I would say that consumers were buying online, going in stores, but I was a retailer at Macy's before this job, and the last 10 days, it used to be 5 days, 3 days, the countdown to Christmas was huge. Most of the time, it is a go-to gift. It continues as we speak. Last year or the year before, during the pandemic, a lot more was bought online. Think about it. You bought something for someone and you shipped it to them because you weren't going to see those people in Christmas. Now, we really think that there is going to be a stampede into the stores the last few days, and it's always giftable, wrapped up in a beautiful box, and easy to get someone something new.
Do perfumes or fragrances ever expire? Can they go back?
It's a good question.
I hear that question quite a bit. If you do not open the actual bottle or you don't start spraying, it would last longer. But as long as you keep your fragrances away from extreme heat or sunlight, quite frankly, they can last for years. They could go on for 5 years. But I wouldn't say they expire. It also depends how much of the natural versus synthetic is in there, and I'm always telling everyone one is not better than the other. But generally speaking, unless you have it right on top of your heater, it's going to last pretty long.
Okay, so I'm going to go home. I'm going to take the bottle of Mademoiselle off the heater, away from the window. We only have about 40 seconds or so left with you. Such a great conversation. But when you look into 2023, what do you think the biggest trend will be in fragrances?
I do believe the home category will continue, and as Scarlett, you were mentioning ambient, but what I'm very proud of and what's changed in the industry and with consumers, it's not just about sexual attraction, it's how you feel about yourself, it's self-care, and we're seeing that fragrance is really becoming a collection, not just a signature fragrance.
Not just a signature fragrance. This is such a great conversation, but Scarlett, you don't wear perfume necessarily.
I don't, but I get my hair done at work, and they use an Oribe dry shampoo, and so I've come to identify that as my scent.
Okay, in a sense, then, you and I wear the same perfume every single day.
Because we walk around with this waft of
we have the same fragrance. What a great conversation. That is Linda Levy. She is the president of the Fragrance Foundation, known as the Fragrance Queen, joining us in the Bloomberg Interactive Broker Studio in New York.
It is now 4:53 on Wall Street. I'm Doug Krisner at Bloomberg World Headquarters in New York with an update on this hour's company headlines. We heard from FedEx a short while ago. The company reported quarterly sales and earnings down from last year, and FedEx also warned of ongoing weak demand. Additionally, FedEx has identified another $1 billion in cost savings. That's beyond what was identified back in September. We also heard from Nike after the bell. Revenue and earnings for the second quarter were both above estimates. However, inventories do remain higher than usual and above analyst estimates, growing 43% from last year. Wells Fargo has been ordered to pay $3.7 billion for mistreating customers. A settlement with the CFPB includes a fine of $1.7 billion. This will cover allegations of widespread mismanagement of auto loans, mortgages, and deposit accounts. And as a result of this, Wells Fargo is now expecting a pre-tax operating loss in the fourth quarter. The Federal Trade Commission is deepening an investigation, one it already opened this fall, into Twitter's privacy and data securities practices. We are told FTC lawyers questioned two former Twitter senior executives in the past month. They were asked about whether, since Elon Musk took over the company, Twitter has complied with the FTC's 2011 consent order. Separately, we are told Elon Musk is actively searching for a new CEO to replace him as head of Twitter. Those are some of the company stories we are following this hour. I'm Doug Krisner. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio.
All right, let's get a check on the latest world and national news with Denise Pellegrini in the Bloomberg 1130 newsroom. Hi, Denise.
Hey there, Katie. Thank you. Yeah, we're watching the situation northwest of San Francisco. At least 2 people are dead after an earthquake epicenter there. The 6.4 magnitude quake struck overnight. At least 1 bridge damaged near Ferndale. And California's Office of Emergency Management Director Mark Ghilarducci telling reporters there are other natural events that could complicate things even more.
If they make private information public today.
Meantime, the water supply also impacted, and more than 70,000 people are without power there. The House Ways and Means Committee meeting today to vote on releasing former President Trump's tax records. Now, before members began the closed-door session, the ranking member, Texas Republican Kevin Brady, held a press conference to say that releasing the tax records set a dangerous precedent that threatens the privacy of all Americans. Here's Brady.
If they make private information public today, it will be a regrettable stain on this committee and on Congress, and will make American politics even more divisive and disheartening.
And Texas Republican Kevin Brady there. We're tracking those developments for you. More coming on Sound On with Joe Matthew in just a few moments. We're in peak holiday getaway season. Airports anticipating high volume, the influx of flyers coinciding with the storm. And there are many changes already in flight schedules. Art Nitzkoff, owner and president of Gamble America Travel, says check your flight regularly.
Most airlines, especially if it's weather related, will usually email you or text you like the day before and give you the option of changing your flight.
Art Nitzkoff there on travel. And Elon Musk's security team is now being sought for questioning. That's after a 29-year-old man was hit by a vehicle. A person believed to be a member of Musk's security team allegedly hit a man with his vehicle December 13th in South Pasadena. And you remember Musk has said a person was on top of the car with his son in it. And Musk, linked that to his claim of being a doxing victim related to people watching where his plane was. And you remember many people were suspended from Twitter because of Musk's opinion on this. Global News 24 hours a day on air and on Bloomberg Quick Take. I'm Denise Pellegrini. This is Bloomberg. Guys, back over to you.
All right, thank you so much, Denise Pellegrini. I am Katie Greifeld. I'm here with Scarlett Fu. You are listening to Bloomberg Business Week Radio. Tim Stenovec and Carol Masser, both off today. And Scarlett, it was a sad day. At least for the ETF industry, we learned about the passing of Kathleen Moriarty. She, of course, is a lawyer who played an instrumental role in the launch of the first ever ETF, known by its ticker SPY. She also helped launch a series of other spider ETFs to the point where she was known as the Spider Woman.
Yeah, she built a reputation as the go-to lawyer for the industry. For anyone who was looking to sell an innovative ETF, the thematic ETFs or the things that were a little bit out there, regulators might be, wondering whether this makes sense. She was their go-to person.
She gave a 2014 interview to Bloomberg News where she said, quote, "I've represented most everybody who's done an unusual ETF." So that's definitely a brand. So in addition to SPY and her work on tons of other ETFs, she's also known for her work with the Winklevoss twins, Tyler and Cameron Winklevoss. She was...
Wait, on a Bitcoin ETF?
Yes, exactly. So they were the first U.S. applicant to come to the U.S. Securities and